What's up YouTube, this is KNG to the JEH of Wall Street, and today I'm going to be showing you the anatomy of my A plus setup. Let's get into the chart. Welcome back guys. Let me go straight into what I want to discuss today. So the anatomy of my A plus setup. Now I already said in my previous video when I talked about having a low, a high, sweep of this low, price will break structure, most likely give you liquidity first, come back, take out this liquidity and buy. And then I said that this is my ultimate setup where I don't need to wait for confirmation. I just need to jump in, right? Now, there's something that recently happened that I discovered I missed. If you remember some weeks back, I did a breakdown of this cell from right here where you see this tiny rectangle, and then I predicted it to get to this point, but initially it's supposed to stop at this point, right? Because that time, no matter depending on how, irrespective of how gold was during that time, it was obvious that the sale is not going to last long. Like personally, it's just my over feeling myself that made me to put my TP somewhere here. But what price did is that price came and took out this low before it left. On trading view, it not really show like it took out the low, but price took out this low. And if you look at this thing from a higher time frame, you're going to see that price already gave us the bullish structure long ago on our technicals, and whatever fundamentals was doing was just in respect to what these technicals have already given us. If you look here, you're going to see that this is the low, this is the high, this is a sweep of this low, right? Price came up, gave us our structural liquidity, and did this now like a change of character to show us that we are now bullish. Then price took from here, which is around, let me see the date, 2nd July till 17th July, which is 15 days before price now triggered this zone, took out this structural liquidity because you're supposed to enter immediately from here. Now, do you know that price has been buying up till now? From here now till today is probably another, this is 10th August, this is 17, it's another like 14 days. And look at where price is. So if you look at it, you see that it's just patience. I saw someone today who caught this buy from this exact zone right here with a 0.02, and the brother is already floating around $900 currently based on where price is. 0.02. Now after this one happened, many days passed by, and what again do we see? We see price doing the same thing here. Price came down, give us this, because now of course we are bullish, took out this low, came here, gave us our structural liquidity, and then took out the liquidity, and already it was already in the mood of buy. So everything that happened when price took out this low, right? All this thing that happened when price came up here, did as if it was bearish, was just noise. Then the buy started, and as it's still buying. In fact, currently now people are saying that gold is not going to come down again. Like gold is probably has gone bullish, and it spent a lot of time contracting in this zone. So anytime you see market contracting like this, just know that it's cooking something. And then when it's done cooking, get the direction and then follow it out. Me personally, that time that I put that unrealistic take profit of right here, when I saw price came here, took out this low and just changed character, because I knew that this is a trend line liquidity like this. So when I saw price went above this zone, I knew that okay, we are now bullish because this is an obvious change of character. So price took out this high and now bullish, and it came down, and then boom, we continued buying. Yo, there has been a lot of things that happen in this chart of recent, honestly. But the only thing that it takes for you to be able to follow it is patience. Like literally right now, what I'm trying to learn is patience. The act of taking 3 trades per week. Because truly, the profitability is not in how many trades you take in a week. It's in fewer quality trades and in your ability to stick to a rigid system instead of switching and fluctuating your system whenever you hit SL. So last week now, I put an entry on the 15-minute time frame here for gold, but actually my entry was from 4,307. But if you look here, you see that they just price just came here and just tapped on this 15-minute order block, and then after I tap on this order block, this zone, I have two entry models. One is sweep and break, enter immediately. The second one is reaction and confirmation. Now when price tapped on this 15 minute order block, what do you see on the lower time frame? You see that price, this is now our extreme POI, this is now our liquidity, and what the price do? Price came out, took out this liquidity right here. That's where you enter. So this is the move that happened today. So even though, because the reason why I put this move below here was because of, I think, a 3 minute zone thereabouts, right? Because on 3 minutes here, we have this obvious sweep of this low. Price took out this low here, and even probably took out with this one. So based on my calculation, this is my, my QMR that I'm expecting price to come back to. I still believe price will come back here though, because currently market is in a what do they call it? Market is like, there's enough liquidity, so I still believe it can come back. Right, this was like a value zone, but still, since I didn't get this zone and price reacted on this 15 minutes, what am I supposed to do? Go down to 1 minute and re-enter. Now if you look here, you're going to see that there's not necessarily any other block like mitigated, or the closest thing that you might use for entry is this. You see this tiny candle here, this is going to be the other block, and then your stop loss naturally. These are people get high risk to reward ratios. So sorry, I'm calling. This is how we get high risk to reward ratios. Something like this. But naturally, you can. There are people that can actually put the SL below here. You see exactly. So if you're buying, you take the SL from the top of the candle down to this point, and that's it. Oh, look at it. Price just bounce on it quick. So, but for professionalism, your SL should be just right here. Okay, this is 41 pips. But anyhow, in case you're the type of one that like trading tight stop loss, you don't really have much to lose. I mean, 20 pp is okay since it's a 1 minute entry. And after that, what do? You target that same high that you're targeting on 15 minutes. That's going to be this high right here. And that's how you get a 1 to 40 risk to reward. This trade alone can, if you hit a take profit on this trade alone, like you can literally be done for 2 weeks. You can decide not to even trade for the next 2 weeks. And this is the type of dangerous type of trading that all these brokers are scared of. In fact, they will even start copying your trades and start begging you to work with them. If problem see you with this type of one, is either they ban you if they are scam, or they promote you and give you elite level of capital, or they connect your trades to an account with millions, even though maybe you might be managing just $100,000. They'll connect your account to an account with millions in capital for you to manage for them. So if you understand that this is how price moves, and currently now when you see the where market is good and win rate is back to normal. So I believe anybody that watched this video to this point can destroy the market. I'm telling you. And I just recently discovered that no matter what you are going through, if truly you know how to trade forex, you can bounce back from anything. So let me not make this video long. I'll catch you in my next one tomorrow. Don't forget to like and subscribe to the channel. I remain KNG to the age of Wall Street.